What's up, YouTube? This is Shinobi Trades. I'm going to do a quick breakdown of how I kind of like to look at the market in my point of view, so you can kind of see the breakdown and see how I like to analyze and look at the market. But yeah, let's go ahead and get into it. So what I like to do is I follow a simple mantra, and the mantra is it is until it isn't. Okay, it is until it isn't. I don't want to predict the market. I don't want to try to front run the market, anything like that. I just, when the market does something, I react to it. That's it. When it does something, I react. So first things first. One thing that we know without a doubt, 100% is true is, let's see here. Well, I'm gonna draw this out. Let's change this. We'll change this to buy. All right. So if we have a candle that closes, right? And then we have another candle that closes higher, and then another candle that closes higher, right, and so on and so forth, right? Candles are closing higher and higher and higher. Let's spread these out some. All right, we actually got our candles here. Let me close that. I don't need this. Right, each candle closing higher. Without a doubt, that is an uptrend. There's no ifs, ands, or buts. It doesn't matter what indicators are saying. Doesn't matter anything else. Candle closes higher than the previous candle, right? Closing higher than the previous candle, closing higher than the previous candle is an uptrend, right? If something now changes that, right? We have a change in that uptrend where now we're not closing any higher. That means, at least for the short term, that stopped, because from here, closing higher, closing higher, closing higher, closing higher. That is without a doubt 100% we are going up. This is the first change in that. So this, at least again in the short term, that's no longer happening, right? And if we started going down, then we'd be going down without a doubt, right? So that change is something that we could react to. The reason I'm saying this is, let's say for instance, we had a candle that was coming down, right? So price was going down, and then we finally broke higher, right? So meaning we had this going down. Let's see if I can clean this up to make it a little nicer, like how it really would look, right? So we had a candle that closed lower, then another candle that closed lower, and then actually this will probably look more something like this. All right, so the close lower, and then I will do it this way. We'll make this easier. Come on. It'll make it difficult to hold these things. Let's draw this out. Okay, so we had, look more something like that. We had a candle that closed lower, another candle that closed lower. Then we have this candle that closed, we'll say it's the same, but then now it just breaks higher. We are now, at least in the short term, going up, right? So what was going down has now changed and it's going up. This motion of going up would have me change the direction in which I'm looking, right? So if I was thinking down, because again, without a doubt, if we have something that's constantly closing lower over time, right? So if we're going, we have a close and close lower, then close lower, then close lower. I have to continue thinking we're going down, right? It is until it is, and I have to continue thinking this is going down until we start closing higher, closing higher, closing higher, closing higher. I'm not going to predict that. I'm not going to try to guess what's going to happen. I'm going to wait for that to happen, right? Wait for something to start closing higher than what it was doing before I start thinking going higher. And the same thing if it's going down. If it's going up, I'm going to continue thinking because we're closing higher, closing higher, closing higher. Uh-oh, now we're closing lower. So now I can start thinking we're going to the downside, right? It is until it isn't. That is the mantra. It is until it isn't. So let's get rid of all this stuff and we'll start looking at how we actually can use this information. If I can get rid of all this, let's back it all up. Make it easy. Get all that stuff out of there. Cool. I don't need that MACD. Is it on there? Okay, no, we're good. All right, so now that being said, I have an indicator that I created, and it's called a skew indicator. And what it does is helps highlight those breaks that when you have a candle closing up or closing down, closing higher, closing lower. Now, the way I like to use this is I have two things. I like to have a bias, right? So that's my higher time frame, and I'm gonna show this over here, right? My higher time frame that shows something closing higher and closing lower. So I'm gonna blow this up first. So for instance, right now, this is showing that I have a long bias. Reason being, from over here, right, this was the short bias. This had a candle that closed lower than the previous candle, and now everything I'm looking for is going down, 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 right, until we get to here. This is that first candle that closed higher. So once that closes higher, everything moving forward is going to be me looking for my long bias. So it's giving me my direction. It's giving my, on the higher time frame, where do I think the market is going, right? And I have to assume it's going to keep going this direction until we get something that goes the opposite direction, right? So until we close lower, I'm going to keep thinking we're going higher, because again, it is until it isn't, right? So for instance, over here we're going lower, going lower, going lower. Uh-oh, we're going higher now. So now I'm thinking close higher, close higher, close higher, until it starts closing lower. No reason for me to think anything else. We have a candle that's pulled back, but did not close lower. Where did it close? Close right here. This is the low. Didn't close lower. So I don't care. I'm thinking we're still going up. We're still going up. Now we're closing. Closing higher, closing higher, closing higher. That's giving me my direction. That's giving me that bias to say we're going up, right? It is until it isn't. There's got to be a way just to clear everything out here. Yeah, remove drawings. All right, perfect. All right, so that's on that higher time frame. I'm gonna scale this back real quick since we're doing this in replay, so to make it easy. So this gives me my long bias. Now on the shorter time frame, right, my 5-minute, I'm gonna cut on my indicator. Now this is giving me the thought process of that same thing. We have the 5-minute, so once this closes, so I need another candle to pop up, so there we go. Everything moving forward, I want every instance I can get into where I'm going long, right? So that means I want the candles to, I want to be in that first initial push when we are creating that new bias, right? That new direction. I want to be in that first move because I'm trying to get and capture as much of the move as possible. And by doing that, the way I can do it is not just taking any candle that's going higher, but I want to take it where we had a candle that, say, first went down, right? Just imagine that was a orange candle, right? Went down, and then we have a candle that overtakes that, right? So we were going down, and then we broke those highs and started going higher. That's what I'm looking for. All right. So what my indicator is going to do, right? And I built this to make it visually easy. You don't have to have an indicator. You can look at it. I want to have where, for instance, this candle broke lower. All right, so this broke lower. So then the next time when I'm breaking above that and start making new highs, I want to try to get in. So either we got to break above this, or if we start coming down and then we get that first break that goes up. So let's we'll walk this forward. And in this case, all right, we broke up. Right, so now I can go ahead and start trying to buy, because again, it is until it isn't. Right, I have my long bias over here. So on the higher time frame, I'm thinking long, and then now on my shorter time frame, I can go ahead and get into this trade. Right, I can go ahead and get into this, and I'm going to start trying to go long. The reason being, once again, it is until it isn't. It's closing higher, closing higher, closing higher, closing higher. Over here, closing higher, closing higher, closing higher. Nothing here has said we're going down, except for this little short term, right? This little short term says, hey, we might be starting to go down, but then immediately after that, not this candle, but this one, we close higher again. So buyers are in there. If buyers are in there, that's where I want to be at. All right. So The way we run this is very simple. All right, we have this. Now we don't have a super defined stop yet, right? We don't really have anything. Reason being is because we need the market to tell us where our stop is going to be. Okay. I know it sounds weird. That's very different than how most people would look at something. Usually you have a predefined stop ahead of time and then you have a predefined exit. We don't have that. We don't predict anything, we react. Right? There's no prediction, it's reaction to the market. It is until it isn't. So you can put a Hail Mary stop, something like 100 points if you're just like, hey, I don't want the market to, just tank and all of a sudden I'm stuck holding the bag. That's perfectly fine. But we don't have a predefined stop. I'm not putting stop at the lows or anything like that. I'm just, I just need I need some room until the market can kind of figure out what it's trying to do. All right. So we're gonna walk through this because there's a couple of different steps of how we manage this. So first things first, we're going to try to stay into this trade until the market tells us otherwise. All right. So as it's going up, right, that price is going higher. So now here's the first indication the market trying to tell us we're going down. Notice here, this candle broke lower than the previous candle. All well and good. What I want to do now is this low, right? Because this closed lower than the previous candle. Notice the candles before closed higher, closed higher, closed higher. Didn't close lower, didn't close higher. So kind of like indecision. Next one closed higher, indecision, right? Didn't close higher or lower. I don't care about the wicks going higher. I'm talking about where did it close? Where did it finish off? Right? This closed lower. All right. So now what we're gonna do is we're gonna look to the next candle that's lower than this candle, right? And that candle is this. So me being in profit, I'd move myself right around there, right? Just below that candle, and we're gonna see if it keeps going up. The reason being, because a lot of times there seems to be this little pullback and continuation back up. Regardless, now though, I'm in profit. What, 29 points, right? This is irrelevant now because we moved our stuff in profit, and we'll see if we can keep going. If it keeps going, great. If not, we got out for 29 points. All right, so that one took us out. All well and good. Over here, on my 30-minute, I still have a long bias. All right, still looking long because nothing has told me otherwise. It's reacting to the market, not predicting it. So as we keep going forward, looking for the next move. This is the next time candle is pushed up, right? If you look over here, close lower. Didn't close lower, but didn't close higher. Close lower, close lower. Didn't close lower, but didn't close higher. All right, the close was lower than the previous close, but not lower than the entire candle. So it's kind of indecision, indecision, indecision. All right, little indecision. Then boom, we finally close higher. All right, so now we can go ahead and look again, trying to get into this market. Same process. We're closing higher because again, without a doubt, closing higher, indecision, closing higher, closing higher, closing higher. This is the market moving up. It doesn't matter what indicator you put on, even without the indicator, you can see this happening. It's not necessary to have one. I just built one for myself. You're able to build one too if you like, but you can just see it. This is going up. This is going up. This is coming down. This is going up. Real simple. All right, so this closed lower. So what I'm gonna do, look over to the next candle that's a little bit lower than that. I'm gonna bring my stop over. That's what, 17 points right there. So we got what, 29. We got 17. All right, and we'll try to hold this. All right, that took me out. Not a problem. I made money still. On my bias, we're still going up. Nothing here says going down, so no reason for me to change what I'm looking for. We got another one that went up. Cool. Now, one thing that I have here, notice over here, I got my distance indicator, right? What I like to do is when I start getting to the bigger numbers, 50, 60, 70, I like to try to see if it'll come back and before moving forward. Reason being, this is a pretty big entry, right? So, not saying that it will, but I like to try to see maybe I can get a little bit of a pullback before the continuation up when it gets a little bit higher. So I'll pull this back some. And in this case, yeah, boom, it did it. Now there's other times where it just take off, so it's completely up to you. There's never a it's always going to do this. I just want to make that clear. Right? We're just reacting. Right? Just reacting to the market. That's all we're doing. So moving this forward, same process, right? Didn't go any lower, but everything starts going up, going up, going up. And as we're holding this, where it is until it isn't. Right? Again, if I take this off, you can see price broke up. No candles broken is breaking lower. They're not breaking lower, right? After that, we break going higher, going higher, going higher. Nothing here is saying get out the market. On my 30-minute, my higher time frame, everything is going up. Nothing is saying get out the market. We're just moving up. So until that changes, right? It is until it isn't. There's no reason for me to get out the market. Buying, 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 buying. Keeps going. So it is until it isn't. Until something says we're no longer buying, I'm a buyer. Until it says we're no longer buying, I'm a buyer. I'm holding on to it. No reason for me to do anything. All right, this is the first one looks where it looks like, hey, we might be closing lower. I even throw this up back on there, and yet close lower right there. Right, you could see it. You can visually see this was the close of this one, and then this one closed lower. So all I really need to do, I come over here. Where's the lowest candle? There we go. And we try to hold on to that. If it comes down, cool. That one whipped me out. Not a problem. That's 263 points, right? 17 points. 29 points. Right, very clean, very easy. Alright. So, real simple process. And it's just taken to the idea of what is the number one thing that we know that identifies a trend, right? That is, how do I want to say, not identifies a trend, but it's without a doubt showing buyers coming in the market. And it's the exact same thing for sellers. Without a doubt, we know if sellers are coming in the market, we got to close lower. We got to close lower. Not wicking, right? The wicks, that doesn't mean anything because it's where did it close? Where is price closing at? If it's closing higher, we're going higher. If it's closing lower, we're going lower. Very simple, very clean. But yeah, you can make this indicator yourself. It's very simple logic or whatnot, the thought process. But this is my way of looking at the market. I'm going to start posting videos about my daily recaps and trades and stuff that I've taken and things like that. But wanted to share this, brand new to YouTube. So like and subscribe, and I'll catch you on the next video. Peace.